Morning all, how are you all doing? Morning everybody, Ian, Amy, Peter, JC, Leshy, Jules, David, Yotko, Christian, Ladder, Gregors, Kenley, Virginia, Unky, Dion, Tom, Isabel. New rule, I'm not going to go through that list every day. Takes too long. Morning, Sarah. How are you all doing? Right, where should we start today? It's Monday. Another Monday. Morning, Susan. So, wasn't here Friday. Haven't got a clue what happened Friday. We'll have a look through it this morning, but yeah, no idea what's going on. We'll see what happens. Morning, day trader, Mark. So we'll start off with the news this week. We've got 8 minutes until market opens. So today is a no news day again. Mondays seem to be no news days pretty much every week at the moment, but so not a lot going on today. We've got new home sales this afternoon, and we've got Lagarde speaking this afternoon. Other than that, no news. So shouldn't expect any big volatility based on any known news events today. What did we have on Friday? Forgotten. US PMIs, didn't we? What happened there? Bit of a rally. So I guess that came out as a negative. Get an ADR hit, but okay. So yeah, no news today. We've got Bullock speaking tomorrow morning. We've got Aussie retail, consumer confidence tomorrow afternoon. So again, no real massive news tomorrow to speak about. Main news we kick off with this week is the CPI on Wednesday. So that's your first big news event this week, which is the inflation figure for Australia. We've got then the rate for New Zealand. Half an hour after that, we're expecting a freeze. I don't expect anything different, but you never know. But we've got the press conference afterwards. So that's where you're going to get the movement in the Aussie and New Zealand. So any pairs you're in, Aussie, New Zealand trades, you want to be aware of that on Wednesday because you need to try and bank some profit before then if you can. So that's your main news to kick off the week, Wednesday morning. We've got German CPI coming out, as well as the Spanish CPI. So inflation figures basically for Europe on Wednesday as well. The CPI for Germany is released county by county, or state by state, basically, which is why it's a all day. We don't get the final figure until all of the states have reported CPI, because they report individually, so they don't report as a country. We've got the Spanish, obviously, as well. And then we've got GDP for the US. We got Bailey speaking in the afternoon, and then we go on to OPEC meetings on Thursday. So that will affect oil in a big way, potentially. CAD GDP, unemployment claims for the US on Thursday, and then the unemployment rate for the CAD and manufacturing PMIs on Friday. So quite a bit of news this week, but not really kicking off until Wednesday. So Monday, Tuesday, fairly quiet. So quite often we'll get slow grinding Monday, Tuesday, and a reversal on a Wednesday. Midweek reversal, as they call it. So that's this week. Over weekend news, not a lot. We've had the Bank of Japan talking overnight. I haven't actually checked this morning. Let me just quick whiz through. Let me just quickly see what the US dollar yen was up to on Friday. Not a lot. Didn't go anywhere on Friday, did we? Okay. Too early to have discussion about cutting rates. That's the Bank of England. Bank of Japan, ETF purchases. Nothing. Right. So apart from that, we had some OPEC news on Friday. That's it. So no over weekend news either. What did oil do? Not a lot on Friday. So it doesn't look like there's a lot of movement on Friday at all. So I didn't miss much, which is good. So far today, no ADRs. We had obviously early closing on Friday as well, because obviously Thursday was Thanksgiving, and then we had early closing on Friday. So it doesn't look like the market actually did a great deal at all on Friday. We had a little bit of movement on the pound Swiss. That was pretty big. not a great deal, is there? So today, no ADRs so far today. Nothing's happened in the Asian session. Obviously, it's Monday, so there's no weeklies. The only monthlies we've got at the moment are the Euro US and the Pound US. So that's obviously based on the US dollar movements. So we are at the end of the month. We're on the 27th of the month. So obviously, this is your monthly movement. We are up at the monthly range averages. So there is chances of a pullback starting. But obviously it is end of month, and they're not very extended, so nothing really to look at on the ADR dash today. RSI dash, we've got pound US dollar. That's it. Well, there you go. See you later. Done. So yeah, pound US dollar extended on ADR on the 4 hour, also extended on ADR. That's your only ADR. RSI. That's your only RSI today. Nice big push there. Good pullback opportunity. So there you go. Nothing exciting. DAX. We'll have a look at on the hourly, see where we are. So we're gapped down on the DAX this morning. Looks like we've had a little attempt at filling the gap, but we haven't. So there is potential for an upside move to the gap fill. There's a pink line I drew on the chart, which we hit on Friday. Funnily enough, it was the resistance. There we go. So we bounced off resistance on Friday. That would have been just before market close, which was early, wasn't it? Oh no, that was the US indices shut early. Friday. So there we go. So potential upside is yesterday's high or Friday's high after gap fill. And then downside, we'll be looking at Friday's low to the downside for the open. See where we go. No win on Friday. I let the EA trade on Friday on the DAX. Didn't manage to get anywhere. So I took a small loss on Friday. We'll see where we go today. Morning, ago, sir. We got 1.5 minutes to the open. Morning, James. So there's not a lot else to really cover today. Might be a nice quick session today. I could do with it because I feel like I've got a cold. Been in London all weekend and the tubes are full of people coughing, and I didn't realise, but we came home on Saturday night. Didn't realise there was a Free Palestine march in London on Saturday. That was fun. I have never seen so many people in my life, honestly. We were trying to leave Piccadilly Circus at about 5:30. No, Covent Garden, about 5:30 on Saturday. Unbelievable. We had to take the emergency stairs to get out of Green Park, which is 193 steps up. That was fun because there was only 4 lifts to get out, and it was queuing down the platform. I've never seen so many people in my life. Unbelievable. Avoid London on March days. Lesson learned. Right. We'll wait for the open. And then we'll have a whiz through all the FX pairs this morning. I just need to refresh my mind as to where everything is. We'll see where we go. Oh, wrong chart. So pre-market range too small today. So won't be taking the pre-market range. We'll take the 5-minute ORB when that happens. Broken to the downside. Let's just have a quick look where the US indices are. I've got small upside gaps to fill on the US indices this morning as well. NASDAQ looks like it came off resistance as well. See where we go. Morning, Lucas. Morning, Grateful. Morning, Michael. What's the limit for the main minimum range of pre-market? 10%. Morning, Themba. So I use 10% minimum, 20% maximum. So ADR is 119 or 1194. 119 minimum range. The idea behind using a minimum range is twofold. First of all, you want a range that you're not going to get whipped on too easily at the open. And secondly, you want a range that you can actually hit a 2R target fairly quickly and easily from, ideally. But there's no right or wrong. I've tested multiple ranges. They're all kind of long-term profitable, but every day is going to be a different one, which would have been right or wrong to use. So you've got to pick one. So not a lot of volume on the DAX this morning. We have broken out of the pre-market lows, but not really with any volume today. DAX, why high also in line with August resistance? Why high? Oh, yesterday's high. Yeah. That's what I just showed you. Yeah. That line I drew on the chart on Thursday. That pink line, because it was that resistance there. What we hit. So that is obviously a strong resistance area because we've got those two peaks. That one there as well. So this whole area we've basically hit, found resistive, managed to break through that first level, then hit that high. So we are really due a pullback on this. I mean, we've got this run started the 26th of October. We're now the 27th of November. So this is an entire month. Basically, we've had a rally, accumulation, rally, accumulation, rally, accumulation, and we're kind of grinding up into this area here. This entire move, they've just been buying the stocks in this index and all indices basically for an entire month. We're due a pullback, and if we are going to get a Santa rally starting, remove someone from the group before they spam. Somebody called admin has just joined. I get admin 2, admin 3, admin 4. They just basically want to spam the group, so I just remove them before they get to do it. So yeah, we are due a massive pullback on this, or profit take on it at some point. So if we're going to get a Santa rally, which we often do with all indices running into Christmas, I think we need to build up a bit of steam. So I'm looking for a pullback in the next week, maybe 2, before we start a 2 to 3 week rally. So this is a little bit too soon to be running into a Santa rally end of October. But this is an instance we haven't been in before. We're in new market conditions, which we haven't experienced before. We didn't get a Santa rally last year, first time in a long time. We may not get one this year. Wait and see. But I would expect to come and retest this propulsion gap, that high, somewhere around here, maybe. Just some kind of pullback if we're going to start a new up leg. But we'll see. The indices are incredibly strong at the moment. But obviously we are still on, not on an up leg, are we? I mean, if you look at it long term, we're still kind of confirming whether or not we're going to go back into a bull market. This is potentially just a pullback on another down leg. So still unconfirmed as to whether we're in a bull or a bear market. We're obviously in a short-term bull market at the moment, but we will see. Okay, so 5-minute opening range is in. Nice close, bang in the center there. So just looking to see if we break long or short on this. If we break to the upside, obviously you need to be aware of the gap fill, which could act as resistance. So if we are going to double top on Friday, and this is the start of a down leg, all we're going to do really is fill that gap and then drop. We may come and retest that high. So target to the upside would be no higher than that today. If we're going to break to the downside, which it looks like it wants to do at the moment, be looking for yesterday's low as an initial target, but we have got this little area here. Friday's price action is very difficult because obviously Friday was day after Thanksgiving in the US, and we had early market close in the US. So the volume in the afternoon was a lot lighter. So all you've really got to go on is this little open on Friday, which was really erratic. So there is potential that we could buy this low again, which is basically exactly where we're going to be shorting into, which isn't great. But that target down there, which is Friday's low, would be where I'd look for some kind of support bounce. But there's really not any volume today. Pretty dead at the moment. There we go. Is your RSI dashboard for H1 M5 set to 7030? 7525 I use. Well, my RSI dashboard is set to multiples. So I have 7030, 7525, and 8020. So I use it in kind of strength mode. So I can see when we start. So this is basically 7030 on the hourly. You can take 7030s. You'll get into more entries than I will. Maybe get squeezed a little bit more than I will, but you may also get into trades which are profitable, which I'll miss. No right or wrong. But I start at 7030 because that tells me when things are starting to get extended. Ideally, I want them to be very extended before I get in. So I look at 7525 as my entry. Anything over 8020 is very extended, obviously. So we'd be looking for pullbacks. Obviously not using the DAX because DAX is a little bit different. But morning, Neo. Are the big overnight fees with the long only set file you use to run on indices? Are there big overnight fees? Depends how long you hold it for. Swaps are swaps. Not much, no. There is, though. Yeah, I mean, it's a cost of doing business. You can't avoid swaps. But I'm still not running that. I'm waiting for confirmation that we're back in a bull market. And I'm not convinced on the S&P yet. I want to see this high broken. We look like we're going back into a bull market. This little rally here, I need to see a pullback and continuation. But this pullback is so fast and hard. It's kind of almost akin to what we had in the bear volatile market. And you look at the speed of this run and how quick this has shot up. We've had one down day in basically a month. We've had kind of one down day. We've had the odd little blip, 2 down days basically in a month. That is not a normal bull market. That's a exhaustion rally. That's desperate for a pullback. So I want to see that pullback bounce out the 2472 zone, yeah, and get back into a normal rhythm before I start getting involved in it again. I don't think it's right yet. The DAX is dead. It's not moving. No volume this morning. Quite surprised because we've had Thanksgiving and early close on Friday, and I was expecting there to be a bit of volume this morning, but it's not interested, is it? Literally not interested. I'll come back to that in a minute. It's not going anywhere at the moment, so we'll wait and see if that breaks up or down. At the moment, it's just struggling to get anywhere, isn't it? So I'll keep an eye on that over there. Right. So obviously there's no ADRs to look at, no weeklies. The only RSI extensions we've got today is the pound US. So I'm going to whiz through all the pairs today and have a look through everything. And just see where basically we are and just see if there's any good support resistance bounces, etc. coming up at the moment. So the only extensions we've got, as I say, pound US dollar. So again, nice divergence going in on this one at the moment. This US dollar obviously weak at the minute. If you look at the Euro US dollar as well, obviously it's weak. So there's good chances we might get further upside on it, but not really gone anywhere in the last week, so to speak. So we'll whiz through all the pairs this morning and just have a quick look at everything. Friday, I banked something. What did I bank on Friday? CAD Swiss. So we had a big rally on the CAD Swiss on Friday. So I took an aggressive, so this is absolutely typical of trading. Yeah. I took an aggressive drawdown control last week, didn't I? Here. And what my plan was if we get a move up into this accumulation, was to take that off and then do drawdown control. It hit target the day I was in London and I couldn't see the charts. And basically, when I came to actually open the charts on Friday evening, when I got back to my hotel, price had come all the way back down here again. So I didn't get the chance to do the aggressive drawdown control. So all I managed to do was bank 1% on Friday. So hopefully, and then US dollar CAD I've closed out this morning as well. I don't trust this US dollar at the moment, so I'm just getting out of it because it was a couple of $100. And it's an easy in and out because I got in Friday. I'm out this morning. So I closed that out, that CAD Swiss. Well, that hit TP basically. So the idea on this one was obviously to do some drawdown control on the higher up positions, but I didn't get the opportunity to do that. So just gone short on the DAX. So we got that double bottom, which was lovely. Sat sideways for an entire week. Friday, we've broken that high. So market structure, reverse alert that we had there. There's your structure break, although it's sat sideways because it's Thanksgiving. But we have managed to break that high. So we've gone into this accumulation. So hopefully, it's clearer on the 4-hour chart. We're going to start a new structure to the upside now. So there's your reversal alert. There's your low. There's your high. So we're looking for a higher low to go in somewhere around here. And then a rally up somewhere into that area there. Which obviously gets me back into profit. So my ADR, my average now on this is just over or just under 125 ADR, basically. So just a couple of days rally on the CAD or a couple of days weakness on the Euro stroke Swiss, and that will get me back out of this one. I did do two drawdown controls on this. Just did drawdown control on it basically to scale out some of it last week. Happened to get out pretty much at exactly the bottom, which is typically what always happens with drawdown control. But anyway, so we'll see what happens with this one today. Support rectangle holding up very nicely on Friday and again this morning. So it does look like this area may be turning into a nice support. So we need to get a good update on this one, ideally today. So got out of that one on Friday, up to 10.7 on the month. Still got, obviously, these positions on at the minute. I'm not taking any yens at all at the moment. Still out of the yen. I'm not going to get involved in that until I can confirm what's happening with this yen, whether we're going to strengthen or not. So the only position I've got any kind of issues with at the moment is CAD Swiss, which is not a massive issue at the moment. So I have put a break even on that last position as well, just in case we get some catastrophic collapse on this. The thing that worries me about the Canadian dollar at the moment is oil. The fact that oil is not able to get this rally started from any level. It doesn't matter what level you pick that looks supportive. It just goes through it at the moment. OPEC are really struggling to rally the market behind oil. Obviously, Canada's main export is oil. As oil price drops, Canadian dollar drops. So the fact that the US is also dropping is going to bring the Canadian dollar down as well. So I'm just worried about a run and retest of this $68 level, which is why I'm kind of protecting my CAD Swiss long and just trying to get out of it as fast as I can, but we'll see what happens. We don't know what's going to happen with oil either. DAX has triggered me short, and now it's going long. Don't know what this is doing today. So we're still inside the opening range at the moment, but looking like it wants to break long now. Come back to that in a minute. Right. So those are the positions I've got on. There's nothing particularly worrying at the moment. CAD Swiss, as I say, is the only thing that's kind of in a little bit more drawdown than I would like. But that has got positions in profit. So it's not going to take much. As I say, I need like an ADR hit to the upside, and I'm out if I want to on it. But I'll see what happens. At the opening has been lackluster this last week with the DAX. Yeah, goes through phases. Very light volume on the DAX at the moment. So I was just watching it. Just about to get triggered into a hedge on it, I think. So the danger with this today is we just do that gap fill and then drop. That's the slight worry at the moment with this one. But we'll see. Right. I did message you about it on Friday. Oh, I don't know. I think I've answered everything on Friday, but is your SPY MA 2472 an indicator you have made or just settings? The 2472 is on the website here. Other indicators and template. You can download the moving average in color. That's all it is. It's explained in the bootcamp how to set that up. I mean, about exiting CAD Swiss. Oh, yeah. No, I did see your message, yeah. After it happened. There's nothing I could do about it. So, yeah. That I think, because my average was there, basically. So the idea was to take that off, do some DD control on the above positions and get that average, you know, just reduce the risk on it, basically. But as it stands, not far away from average anyway. So I've got some overnight swaps to count into that. Hedged on the DAX. This thing's got no movement today. So upside on the DAX today is basically yesterday's high, which makes it really tricky because that is just 2.5 hour. So I'm just going to watch the price action on this. Downside on this today. I mean, it's such a tight range from Friday. The danger with getting out at that low and that high is if the market decides to rally and do an ADR today. Obviously, the actual movement to ADR is all the way down there. So you got all that distance, basically, from Friday's low and Friday's high up there. Obviously, you've got all that distance up to ADR. So the previous day, or rather Wednesday's low, is 5R. So that's a much more realistic target. So we got that low there from Friday, which we tapped into on Thursday as well at 4R. So this propulsion gap basically is a good downside target today, somewhere around there. Upside, it's risky. It's either going to double top from Friday and we're not going to go anywhere today, or it's going to break out. And if it breaks out, we're at all-time highs. So we could go absolutely anywhere to the upside. So I think plan of action this morning, watch the gap fill. Obviously, if it rejects the gap fill, you've got potential to get out of the longs there and hope it goes short. But again, it could come up and test that area. It's a difficult one today. We're coming out of like low volume days into what could be a breakout into a Santa rally sort of scenario. It's very, very difficult to call it. So just going to let it play out and see where it goes. I'd like to see it come and test Friday's high and watch for price action up there. So just monitor that today. See where we go. So I'm going to run through all the pairs basically and just have a look at where everything is. See where we go. Wayne, having issues with dashboards as mentioned in Telegram, but widening the watch list. It now looks like IG have, for example, euro, US dollar, pound. Maybe the issue, I don't know. Basically, with the dashboards, you have the inputs there, and then you have a suffix and a prefix. So if your broker, so this is just a comma separated list of pairs. The very last one mustn't have a comma on the end of it. Yeah. If you've got a suffix, in your case, it would be that. $sign in brackets would be the suffix. Try that. I don't know. I don't trade with IG, but that's what that's there for, to filter out suffix and prefixes. You just have to play with it. IG are not a good broker, in my opinion, but they force you to use lot sizes you don't want to use. They've got big spreads. It's just not. They're big, IG, because they got a very big marketing budget behind them, but as a broker, they're not very good. Not that I found anyway, but maybe time to switch. Right, running through all the pairs. Aussies. And that's assuming you're on MT4. MT5, I don't think has the prefix suffix. I haven't used MT5 for a long time. I know it is a slightly different setup on that. Got it here. Yeah, pairs list on MT5, you don't have the suffix and prefix. You have to put the actual thing in. So if you're on MT4, you're fine. It's just a suffix prefix issue. That will fix your problem. Right, so Aussie CAD. So obviously you need to be aware of news this week. Australian and New Zealand, Wednesday morning, the entire Aussie stratosphere goes nuts, basically. So we've got the CPI figure, the inflation figure for the Australian being released at 12:30. Then New Zealand rate announcement at 1 o'clock. And then at 2 o'clock, we've got the press conference from the Bank of New Zealand, which is where they're going to lay out forward guidance for what they're going to do with their interest rates moving forward. So you're going to have a volatility spike off of the CPI figures, a volatility spike off of the New Zealand rate, and then you're going to have potential fundamental directional change off of the New Zealand press conference. So Wednesday morning, all the Aussie pairs are going to go slightly nuts. So gap fill just completed on the DAX. So there's your gap fill. Done. Gapped up as well, on its way there. See, there's no volume here this morning. There's no liquidity in the market today. We're getting gaps. Just be careful today. We could get some big candles. There's no volume. There's no volatility. Yeah, there's no volume in the market. No liquidity at the moment. So anything you're in Aussie-wise, God, I wanted to get out of this on Friday as well. I've got two positions too close to each other because I took one manually and the EA took one. What day? I shouldn't have taken Friday off, should I? But yeah, anything you've got exposure on Australian dollar-wise, you just need to, and New Zealand dollar, you just need to be aware on Wednesday you're going to get all of that movement overnight. So ideally, if, you know, I've got a target here on this one. If we are, for example, down here, on Tuesday evening, I would either take some off or protect it. Also, move targets. Yeah. So one of the big things you'll find with position trading is when you get a news event, it can make you go into drawdown very, very quickly, but it can also make you a hell of a lot of profit very quickly as well. So if, for example, we get to, I'm just going to move my TPs down there just because we've got news coming up on Wednesday. So, for example, if we are sitting down here on Tuesday afternoon, for example, I would take one of those off, bank it, protect one, and hope for a big spike to the downside. Yeah, because you can make a hell of a lot of money on that. If it spikes to the upside, you've got an opportunity to take another position and get in on the retracement. So with all these Aussies, there's no point in looking at support resistance or planning anything this week because we're going to get a massive movement. Same with the New Zealand dollar pairs. So at the moment, obviously, the Aussie CAD, we've had this big, strong push. This was the CPI figure for the US dollar, which moved the Canadian dollar. We retested it, sat there for a couple of days. We've pushed away again because oil's been weak. And now we're sitting here flip-flopping around waiting. So there's no real directional bias on this. All the trades are kind of invalid now because we've just reset, had another go, reset. It's not going anywhere, basically. So I'm short at the moment. If we get positive, negative CPI figures for Australian, that's coming down. If they come out bearish with the New Zealand dollar forecast as well, this is going to come down even harder. So on Wednesday, there's a good chance this could always easily be back down here, 200% of ADR. So moving targets down to that propulsion gap. Got this area here as well, potentially, that we could come and retest as well. So just going to keep an eye on it, basically. But if we push up to there, obviously, there's an opportunity to get another position on ahead of the news. But this could go anywhere this week. Same with the Aussie Swiss. We're sitting bang in the middle of the range at the moment. Range high, range low. We're just bang in the middle, gone absolutely nowhere for an entire week. So you never want to take trades from the middle of a range, take trades from extremes. So from that weekly high or the previous weekly low. Well, that's a monthly high. And that 3-week low. So at the moment, that's sitting in the middle of nowhere. We want to wait for it to get up to there or down to there before we start getting involved in that one. Aussie dollar yen, all the yen pairs I'm basically flat on at the moment. So this US dollar yen, we don't know which way this is going to go yet. At the moment, it looks like the move that we had weakening the US dollar, coupled with that sort of temporary strength we had coming with the yen, may continue. So this looks like it's sort of a 50% pullback into that previous area, and we're going to continue that down leg. We need some news to confirm more US dollar weakness, basically, which we haven't got at the moment. So this week we've got some US bits and pieces of news coming out. So I'm waiting for some news, basically, see what the unemployment does, as to whether or not that US dollar is going to weaken. If that continues to weaken, we should get continued strength in the yen. So you want to be shorting everything against the yen, which is kind of my plan and has been my plan for the last couple of months. But as you can see, it's just not been playing out. It's just been erratic. So we're waiting basically to see what happens with the yen. So at the moment, I would be much more happy taking everything short against the yen. So there was an entry back here on the US dollar yen, on the Aussie dollar yen. We double topped it last week. So we've had a reversal alert there, as you can see. So it does look good for shorts at the moment. It's rallying at the minute, but yeah, looks great for short. Aussie dollar, but again, news is going to affect this on Wednesday. Aussie New Zealand, this is the one that's going to be an absolute nightmare. This could go either way hideously on Wednesday. No idea. If we get positive Aussie and negative New Zealand moves, that's going to go crazy. If we get a positive Aussie and a positive New Zealand, the stronger is going to win, usually the Australian dollar. So there is much more chance of this going bullish this week. But at the moment, bang in the middle of nowhere. Yeah, you're stuck in the middle of a range. We've been sideways for over a week, so there's just nothing to do with it, really. Aussie US, broken out the highs on the US dollar weakness. So you can see how weak this US is at the moment. 2 positions on that at the moment, looking to get out on a push back down towards this propulsion gap. But this propulsion gap, which is the CPI figure for the US, which the market did not like, held up. They added into it. At the moment, we've just broken out the new highs. So difficult. And then we are kind of sideways for a week. But as you can see, anything US at the moment is bearish. So you're looking for longs against it. But I say this will change this week as well. New Zealand dollar, same story for all of these, basically. Wednesday, it's going up or down based on that rate. We're expecting a 5.5, which will be a freeze in interest rates. If you look at the fundamentals on the New Zealand dollar, which I had up a minute ago, and I've just got rid of. We are on 5.5. We are 5.6 inflation. So inflation is the highest of all the currencies at the moment, and it is coming down very slowly. So it's very difficult for them to put this up because their unemployment is now going up. You see their unemployment is increased by 0.3% quarter on quarter. So that going up increases unemployment, which stops them putting that up. However, if that doesn't go down, they've got to put that up, which makes that go up, and it becomes a hideous balancing act of what the hell. So they are in a very, very, very difficult position. It'll be really interesting to see what they say on Wednesday. I don't think they will put that up any further. If they do, they're setting a new precedent because they'll be knocking the US for 6, which will make the New Zealand dollar potentially stronger longer term. But with unemployment going up, it's going to be very hard for them to do it. So all these New Zealand dollar pairs, anything you get into this week, you are literally, flipping a coin. This could go absolutely anywhere this week, and it could well be a little bit like the CPI figure. We could be seeing a 200% plus ADR move and a continuation, or in the opposite direction. So just be careful. I'm not in any New Zealand exposure at all at the moment because the New Zealand dollar hasn't gone anywhere for a week. We've had no RSI extensions to get into any positions on. That I got out of that one last week. Haven't had any new entries. So all these New Zealand's, you see New Zealand dollar Swiss, totally sideways, totally flat. Last entry was there. Yeah, in, out, done. Another entry there, in, out, done. Yeah. So it's not going anywhere. So just be careful with any of these, especially the ends, obviously. I'd just leave them if you can. If we do get any extensions before Wednesday, obviously you can get into initial entries. It's a 50-50 shot, obviously, as to whether it goes up or down from the news. So that's basically all the Aussies and New Zealands. They're going to be very difficult to call this week. Canadian this week, we've got the unemployment rate on Friday. So we've also got OPEC on, and we've got CAD GDP, actually. Big week for the CAD. We've got OPEC, GDP, and unemployment on Thursday and Friday. So potential big moves for the CAD as well. CAD Swiss, I've got longs on at the moment. Longs, I've been in, as you know, for ages on this one. We were expecting, after that rally, a lovely big deep pullback. We actually got an A-shaped recovery, which wasn't expecting, but we did. And that was because oil suddenly collapsed. We've had continuation weakness on the US dollar. So US dollar down and oil coming down at the same time has really, really weakened that Canadian dollar. So longs on it at the moment, hoping that we're getting a pullback. But as you can see, we've got a very strong support level here, which is this previous balance that we've come back into. We tried a little pullback and new rally up, failed, slammed down. So basically we're stuck at the moment down below support. So potentially that is a pullback on that leg, and we're going to continue to the downside. So we'll wait and see what happens with the news this week. DAX is rallying up into resistance, potentially. Just suddenly stopped. As I looked at it, it's like a rabbit in the headlights. I looked at it and it went, nope, not moving anymore. So we've gone straight through the gap fill. we're rejecting that propulsion, which is basically the end of Friday. So that's kind of irrelevant, all that price action, because it's nothing. So potentially we're looking to come and test Friday's high. So there is potential for an exit up there this morning. We'll see what happens if we get there. So yeah, that's CAD Swiss. At the moment, obviously, I'm long. It's just rejecting again. Let's pulling back down again. So hopefully, we're going to come up and test that propulsion gap, but lots of upside resistance. They're going to be pretty difficult to get out of that one. CAD Yen. Again, everything yen, I would be much more interested in shorting than longing. You had an entry on Friday, which you would have been out basically today already. But we have got further upside propulsion gaps there, but we've now got nice big propulsion gaps to the downside. So it's either going to do that, or I don't know. But I would be much more interested in shorting. Just had a reversal alert on it this morning from Friday on the hourly. But all these yens, I'm steering clear of at the moment until we've got confirmation from the Bank of Japan really as to what they're going to do moving forward. They keep saying they're going to increase their interest rates, which they haven't done for 6 years. If that happens, you do not want to be longing the yen, longing anything against the yen. You want to be long the yen. So I'm just observing at the moment. If I was gun to the head, say you've got to trade the yen, I would switch the market reversal alerts EA to trade short only on everything against the yen. So long yen, basically. So any opportunities to the upside would be good to take. Any opportunities to the downside, I think you're going to struggle getting anywhere. And if that interest rate confirmation does come, and they're not going to change the interest rates until next year, but if they say, again, we are thinking about doing it, and it's the first rumblings we've had in the last few months that they're thinking about doing it. When we get some concrete evidence that that's going to happen, that thing's going to come down hard and fast. Everything's going to come down against the yen. So just don't want to be longing anything against it at the moment. Short term, intraday, you can do what you like, obviously. But if you're going to start any positions, I'd much rather be starting positions that way. So that's your Canadians and the Swiss as well. I'll quickly whiz through the yens. All of these pretty much the same. So we've got that move down that started basically when the US dollar started to weaken. So you've just had a reversal alert there. That's a 61.8 retracement, looking for a new leg down. If market structure is going to shift to the downside against the yen now, this is where it's going to go from. Pound yen, double top. We've had a bit of a stronger move on the pound. But again, reversal alert. When that goes in, we'd be looking to come back down and retest these lows potentially. And New Zealand dollar yen, obviously this one could go either way this week. But obviously if the yen does power up, it's going to run it over. It's going to run over everything if the yen powers up. And US dollar yen, so this is our main sort of issue that we've had with this 150 level and the intervention. So we've had multiple intervention attempts which have failed. And the market finally came off that 152 level, which was the previous intervention from October last year. They literally sold that off on the US CPI figures, and then the yen started to rally. So it looks to me like we are getting underway with some yen strength. And if that rally is going to come on the stock indices into December, that US dollar is going to be coming down as well. So, whoops. So yeah, like it short. So that's all your yens. Euros. So euro odd obviously is going to be affected by the Australian dollar. Again, total sideways mess. You can't do anything with this. Haven't done anything with it since that short. So there's nice easy in and out there. Nice easy in and out there. Again, it's just flip-flopping around. Just long or short, don't care. Just give us an opportunity to get in and I will. So that one can be taken in any direction. Ideally, you want to be looking to get in at highs and lows. So if we can get an RSI extension to the downside approaching this area, be a nice little long. But Australian dollar, obviously, Wednesday. So we're going to get movement either way on Wednesday. We just need to see if it goes before that, basically. DAX is rejecting a little bit at the minute, but not particularly going anywhere. Euro CAD. So Canadian dollar, obviously, we've got news towards the end of this week. I've got three shorts on this one at the moment. Had an out on this on Friday, but wouldn't have taken that anyway. But you can see where my TP is. So hopefully we're just going to start another leg down. So this is your reversal up there. We've put in a new leg down. Bit of a messy Thursday, Friday, obviously, because of Thanksgiving, but we are holding structure. At the moment, we have had a reversal alert to the upside which is rejecting. So we could be starting a new leg up here. So that's a 38 retracement. Eventually, might be a bit shy of 38, that. Couple of pips. But yeah, so that's a very shallow pullback potential on a new leg up. But yeah, I'm short on that one at the moment. But again, no entries on this since that extension there. So I got in there. Second entry, third entry, fourth entry, got out of last week. So I'll be adding that on again if it comes down further. So it's already banked money, but again, stuck in the middle of nowhere. Euro Swiss, totally stuck, 3 weeks now. So that's your 3-week low. Just stuck, totally stuck, sideways, bang in the middle of nowhere. Can't do anything with that. Big downside targets on this. We've just tapped into the propulsion gap to the upside, so your market structure is shifted, potentially looking like it's going short. But yeah, lovely downside target, so I'd want to be going short rather than long on that, but no entries. That's the last entry, in and out, done. So nothing on that one. Euro pound, again, sideways. Got out of this one last week on the news. Got slipped out on Thanksgiving for a loss, small loss. But this is totally sideways again. So if we do get a push down into here, and I can get an entry there, I will do. We've got a backup support coming down here. So any kind of bounce out of those areas would be good. First entry there, second entry somewhere down there, and wait for a pullback on that leg. But could go either way. There's no real news on these two this week, so could go anywhere, that one. Euro Yen we've covered. Euro New Zealand, we're down at lows at the moment on this. But again, you know, looking at the chart, we had a long there, which I got out of. We had a short there. So, you know, it's moving very, very nicely, but not really going anywhere at the minute. Euro US dollar obviously is going up because the US dollar is weak. I've got 3 shorts on that. A little bit stuck on this one because of the distance between the first entry and the second entry being 2 ADR. We haven't gone anywhere, literally. So got a third on it last week. We haven't gone anywhere. So I'm hoping we're going to double top on this and pull back down again. But there's no real strength in the euro. Obviously, there's no strength in the US at the moment. So we'll see what the GDP comes out on Wednesday at. We might get a little bit of a rally off of the GDP number. We've got the CPI for euro coming out as well on Wednesday. So euro US dollar, really Wednesday is when you're going to get the movement on this one, but we're probably just going to stick in a holding pattern until then and not go anywhere. But lovely downside targets on this. But it's going to need some US dollar strength, and I just don't think we're going to get that at the moment. Thanks for subscribing. Jep Bro, welcome aboard. And Free AGB, welcome aboard. Didn't see you subscribing there. So there's your euros. I'll quickly whiz through the pounds and the US dollars, and then I'll catch up on the chat. So pound, Aussie dollar basically is what's going to drive this one. So we're waiting bang in the middle of range. It doesn't matter what you do with this. Take it any direction you like. I've only had 1 trade on this since October, which was there. Straight in, straight out. There was an entry there as well. Quite sure why that's not shown, but yeah, it's very easy to get into this one. It's just up and down all the time. So range highs, range lows, not from the middle. Pound CAD, again, weak Canadian dollar has helped this one rally. I took a short there. Again, no RSI extensions. Good resistance. We've just bounced off this morning on that one. So you've had a 15-minute reversal alert on that this morning, just now. So could be a nice little short. You can get in on the retest on that one. But yeah, that's just sideways for the entire week. Pound Swiss, very much the same. Nice double top, just gone in this morning. Pound weakening this morning across the board for some reason. So just a little bit of weakness showing on the pound this morning. So again, double top resistance. Nice looking entry there. You've just had a 5 and a 15-minute reversal alert on that one. So you can get in on that one short. And if that doesn't work out, second entry somewhere up there. Pound New Zealand, again, no point in looking at New Zealand dollar. Sideways mess, just a utter mess, sideways range. So we had a little price discovery out up into the double top, but that's your range at the moment. So long it there, short it there. Not doing anything there. Nothing you get into at the moment, is there? It's just crap. US dollar weakening on the US dollar, but the US dollar is just weakening a little bit, then a little bit more. Just nothing to do with that one. Good potential resistance coming up here. Got a nice area of balance we sat in for a week and a bit. We had a price discovery to the downside, previous support turned resistance, and off we went. So this propulsion gap here, which we retested, which would have been news. This is our first retest of this level, so you'd be looking for a pullback on that somewhere from either there. It'd be more like that area there, somewhere around 150, 125, 150 ADR. If we could get up to there, would be a lovely short, and then just pull back on that long. But again, the CPI figure, the US dollar is very difficult at the moment. Since the CPI numbers came out, we've been weak. So we've had a week of weakness, and then we've had Thanksgiving last week. So we kind of missed 2 days really of volume and trading on the US. So it's still very difficult to decide whether or not that US is going to get any strength or not. But pushing up into there would be perfect, that sort of area for a short, if we can get there. But if it does get extended on RSI, I will be getting in short regardless anyway on the reversal alert. New Zealand's I've done. US dollar, CAD, stuck basically. As the US dollar weakens and oil weakens, obviously that means you've got US weakness and CAD weakness together, which means you don't go anywhere. Yeah, a week against a week is a range. We've got no volume, just no movement on this one really at all. So it's going to get moved on news. So there's your CPI news. There's the retest. There's them adding into the shorts on the US twice. We're waiting for news. This is going to move in fits and spurts on news, and then it's going to flip-flop around, wait for some news, flip-flop around, wait for some news. That's basically what this pair typically does. So I had a long opportunity there, which I got out of this morning. So that was your hourly RSI extension, pushed up into a propulsion. It rejected that propulsion, which is why I got out of it, basically, because I'm expecting market structure to remain short. So exited the long. US dollar Swiss. Again, I'm in long on this one at the moment. Gone nowhere. Week and a half, really. 2 weeks, really. I mean, after the CPI number, got in off the CPI number, looking for some kind of pullback, added a second position, looking for some kind of pullback. What we got was 3 days sideways, one news event, a week and a half sideways. It's just completely stuck. Nothing you can do with this one at the moment at all. US dollar yen we've looked at. So yeah, load of rubbish at the moment. We're just waiting for stuff to move. CAD Swiss dropping again. So see if we get a reversal alert to the downside on this. Hopefully this area is just going to hold up. We obviously spiked into, so looking for some buyers to add back into that move there. But if not, it could well just sit sideways. You know, just sat sideways all last week. So we will see where we go. Are the charts you're looking at now a mirror of your VPN charts? What? VPN charts? What are they? Don't know what you mean. VPS? Yeah, this. Well, yeah, because the reverse alert's running on this account. Yeah, the EA is running on this account. That's what you mean. CAD Swiss. There you go. CAD Swiss. I'm long, looking for a pullback. Now I'm looking for a pullback on this leg. I was looking for a pullback on that leg. We got a bit of it. Just a mess at the minute. Oil is really screwing the Canadian dollar at the moment. I'm really hoping OPEC can sort something out on Thursday. We had the OPEC last week basically tried to rally the market, and they did a fairly decent job. But the market then just decided to turn tail and run again. And obviously then we had Thanksgiving. So at the moment, we are contracting in a symmetrical triangle. So I'm hoping we can just hold here until Thursday, and then OPEC will rally the market and come to some kind of agreement for oil production. But at the minute, all the oil producing nations are butting heads and not able to help themselves. So who knows what's happening with that one. Wayne thinks it was all about the suffix. Yeah, cool. Thoughts on pulling money out of your personal account to pay for challenges? What are your thoughts on pulling money out of your personal account to pay for challenges? If you can afford to trade on your own capital, don't do challenges. Why would you want to restrict yourself into hideously difficult to trade market conditions, or rather targets, when you can trade freely with your own capital however you like? The only people that need to use prop firms are the people that haven't got capital. And those people have got a lot more difficult job. So I wouldn't if you can afford not to. Morning outro. How am I going to play out the DAX? So watching price action basically at the highs. So downside, I'm just going to let it run down to 4R. But I'm going to watch yesterday's or Friday's low. Upside, I'm going to watch yesterday's high. But obviously upside on the DAX today is virtually unlimited. So if we break today's high, or Friday's high really, which is that support, that resistance that we identified last week, which we bounced perfectly off of on Friday, albeit on no volume because it was Friday. If we break that level, it's basically the gap fill, which is 200% of ADR, and then all the way up to the previous highs. So if we break Friday's high today, and this is why I'm cautious about exiting here, if we break Friday's high, the upside target is the gap fill, which is pretty much 162.35. So if you look at where we are here, somewhere up here. Yeah, if you look at it on the larger scale, if we break that high and hold, we're not going to get up to there, but there's nothing resistance-wise above us. So getting out here could mean trying to get an aggressive exit, which just goes and ends up here today, which would be very, very costly. So I'm just watching price action at the highs. At the moment, I've just got my targets up at 5R. So just going to watch what happens here. If we get a good reaction there, I might have a go at just exiting those longs and trying to hope that we go into rotation, basically. But I will re-hedge it. We've got to get there first. At the moment, we're just not going anywhere. So we'll see if we can get a break or an attempt at yesterday's high first. Yeah, stuck. Outlook on Aussie dollar Swiss. Already done this one, but sideways at the minute. So anything you get into Australian dollar, so that propulsion gap at the moment is holding. They've added more shorts there. We've retested, added more shorts. So all I would imagine we will do until Wednesday is that. So you could have a go at shorting last week's high. But from a position trading perspective, there's no entries on it at all. At the moment, UK 100 been bouncing between daily high and low for the last week. Yeah, I haven't got that. Pretty much the same as I would imagine the DAX. It's been very rotational, hasn't it? All week. Hard to trade, very hard to trade this over the last week. And today as well. It's just, same today. It's just stuck, isn't it? Dropping back down again now, look. Back into the initial cash balance, back into the opening range. So this is obviously the the first propulsion move today. It's kind of potentially that. However, could also just be that. Tricky, very tricky today to know what to do with this one. Is there usually a difference between D40 and D40 cash? No. There will be a difference in price, yes, but there won't be a difference in movement. The movement will be the same, but the price will be different, that's all. One is the futures, one is a CFD, that's all. But the price movement will be the same. You just have a different price quoted. But your candlesticks will be the same because it's measuring the same stocks. So the changes you make on these charts, stop losses, etc., are actually changing your VPS charts. Yes, the same account. Might get along here. Option here is obviously to take these shorts off and assume that this is going to be a structure break to the upside. So you could take the shorts off here. Doesn't look like a bad idea to me, to be honest. So if you take the shorts off there and lock that loss in, and then if we can run up to that high, that gives you a break-even exit today. And if we test that high, that gives you a profit. That's the more aggressive exit today. But personally, I'd rather see what happens at that high. But exiting now, they are buying up this propulsion move, look. So they're adding more positions in here. So this could go from here. And if we are going to break that high today, we could get a very big long run on today because there's no resistance to the upside. So I think the difference is in the large gap you have, but I have a load of candles in there. Yeah, so you've got broker data, basically. So some brokers will quote pre-market data. So this broker, Robo Forex, quotes the Frankfurt Open, which is 7 a.m. So the electronic exchange opens at 7 a.m. The floor opens, or there's no floor anymore, but the proper bell rings, if you like, on the exchange at 8 a.m. Some brokers will show you data, not so much 24 hours a day, but they will show you pre-market data, which is basically an estimation of what price has done in those stocks. It's not real trading, it's broker data. It's very much the same as with stocks. A lot of traders this is known as the Globex session that we're in on the US. So all of this is Globex. So this is the Chicago Mercantile Electronic Exchange. The bell rings at 2:30 p.m. UK, 9:30 a.m. New York. All of this is electronic algorithmic trading The floor is shut. New York is asleep. The brokers aren't in the banks. Yeah. So a lot of traders that trade futures and CFDs, they will ignore all of this. We're interested. Where did we close yesterday? We closed there. So what a lot of traders, let's say, for example, the NASDAQ trades like this today, and this is the opening bell here, and price is here. Traders will be saying we've got a gap down day. Yeah, regardless of whether this price has come up here and touched that and then push back down there, they will take what human beings are trading and remove everything algorithmic and everything broker related. There's no right or wrong, it's personal preference. But I prefer not to see the DAX pre-market because it's not real trading provided by your broker. So it's a little bit like all these people that trade on deriv.com and they trade the volatility indexes and I don't know what they're called, all the synthetic indexes that deriv.com spew out and allow you to trade. They're all manipulated by the broker. They're manufactured by the broker, manipulated by the broker. Therefore, they can do what the hell they like with it. If there's a load of orders sitting here and a load of orders sitting here, this is worth 25k and this is worth 15k, deriv.com will move the price up to here, stop all these people out. And then it will look at where are we here. There's a load of orders up here worth 45k. And now these orders down here are worth 25k. They'll move price up there and stop all those out because they control the candlesticks. They control the price. Yeah. So most traders won't pay attention to pre-market data because it's not real. This is real. This is trading. This is the open of the exchange, although it's a bit crap today. This is real trading. So just ignore pre-market stuff. This is why I use Forex, because Forex filter out. They just don't provide pre-market data. Most reputable brokers won't give you that. Do you recommend VPS? I don't really want to add costs. I use my phone as I use my phone as hotspot if internet goes down and have more than one laptop PC. Well, VPS is for running EAs. You don't need a VPS for any other reason than to run EAs. Unless you're going to leave your computer on for 24/7 with a permanent internet connection, you need a VPS. If you're going to run EAs that run overnight. If you're running intraday EAs, you don't need to. But if you're running overnight EAs, like the Market Reverse Alerts EA runs 24/7, 365, you've got to have a VPS. Because what if there's a reversal alert that happens like Friday, for example? Whoops, that was a DAX. So that reversal alert on Friday, yeah, when that happened on Friday, I was in London. So that $200, I wouldn't have made that if I didn't have a VPS. Because the EA would not have seen that reversal in structure and taken that trade for me. Yeah. And you need to be able to monitor the market 24/7, 365 because you don't know when the moves are coming. You don't know when the reversals are coming. You don't know when you need to scale into your positions. The EA, that's the EA's job. And the EA has to monitor the market all day, every day. Otherwise, it's not going to get your trades on for you. A vid on your sysadmin setup would be instructive, e.g. backups, power outages, VPNs, and mirroring. I don't do any of that. You're really overcomplicating things, Whipping Post. Right? I have a VPS, which runs MT4 with my EA on it. If the power goes down in that place, power's gone down. I'm connected to the same account here, so I can manage everything here, but it just won't take trades for me. I'm not an institution. If my power goes down here, the stream stops. And I get my phone out if I need to. But that's it. Market's coming down. So we're back down inside the initial opening range now. Look, not going anywhere at the moment, are we? So that support or propulsion gap held to the upside. So downside, as I say, it's still watch yesterday's low for me at the moment and see if we get any price action down there to get out of those shorts and then try and get a pullback. But there doesn't seem to be any volume today. So I'm not expecting large movements. We've got no news events today. We've got Lagarde speaking this afternoon. There's no scheduled news events today. So I think basically all I'm going to do today is just watch price action down at yesterday's low, because we know there's going to be buyers at yesterday's low. That's why it's yesterday's low, because that's where they bought from. So there's buyers here. So I will watch for basically any kind of price action down there that looks like we might be adding more buys to get out of those shorts, and then see if I can get an aggressive exit there. If it slams through yesterday's low and we don't get any price action, this area here is support to the downside, 4 to 5R. That's where I'll have another go at getting out. But at the minute, didn't get to where I wanted up there. So just sitting in it, waiting. Nothing much we can do to it today. It's just 2R to the upside and see if we can get 2R to the downside. If we are rejecting highs, i.e. high, low, lower high, and now we're going to put in a lower low, you could exit those longs and just keep the shorts on and try and get out yesterday's low for a break even. But I'd rather wait to get somewhere and see some price action first. Yeah. But yeah, for VPSs and stuff, if you're just running, I mean, basically, if you can't leave your PC on 24/7 at home, and even if you can leave your PC on 24/7 at home, you have not got a tier 1 internet connection running into your house. You've got a domestic internet connection. The server room where my VPS sits is an institutional server hub. Yeah, they have uninterruptible power supply trailers outside. So if things go wrong, they're in a much better position to keep my server up for me. If you can't afford $25 a month for a VPS, what are you trading with? Just get one. It's a no-brainer having a VPS, but only if you're running overnight strategies. If you're running intraday, it's really not necessary. Just trade on your PC or your laptop. It's only if you're using market reversal alerts, EA, and position trading, you need to, or if you're holding any strategy that holds overnight, basically, you just need a VPS. If you're reliant on an EA running your trading for you. Obviously, if you're doing it manually, who cares? Whipping post. I meant VPS. I hear you. Simple. It's simple to you. For newbies, these things are not immediately obvious. I've only just sussed out we're mirroring the instance. I'm not mirroring anything. I'm logged into my trading account on this PC. My VPS is logged into that trading account on that PC. All a VPS is a PC. Yeah? Think of a VPS like a computer. It's your office. You leave your computer in your office on. Yeah. You can access your account from any device, anywhere in the world, on a phone, a tablet, a computer. Yeah. So if I log into an account, my account here, and go to one of my trades, yeah, and pull a TP up to there, on my VPS, that TP has just appeared on the chart because this is the account. I'm logged into the account, the trading account. The EA automatically takes trades on the account for me. I can shut. This trade was taken by the EA last Monday or whatever. Yeah, I have put a stop loss on it. So if it stops out and then pushes like that, the EA will put that trade back on again. Its job is automation of me, but it's just a computer. Literally, it's all it is a computer. We double bottomed on DAX to the pip, buying up the lows. This has got rotation written all over it today. Hopefully it collapses or does something, but because I always wondered what you were adjusting. Plus, it's good to tip to view higher timeframes without resetting the EA. Yeah. Now I'm going to manually trade with alerts, RSI, ADR, only in waking hours. Yeah, that's fine. If you, I mean, before I built the EA, the Market Reversal Alerts EA, I position trade manually for years. You know, so the way I teach in the bootcamp is around support resistance. So planning your trades out, you know, I'd say go long. I can't really see any support resistance here, but yeah. So go long. If that doesn't work, you got potential maybe there for an entry. You got an entry there. Yeah. So I was teaching previously to place pending orders at those levels. But the Market Reversal Alerts EA means that you don't have to get triggered on pending orders that just get flown through. It waits for structure reversals to enter. That's the only reason I use it. I prefer it to have the buyers on board if I'm long before I take a second position. But at the end of the day, as long as you're scaling into a position and your entries are a decent distance apart, you don't need to wait for a reverse alert necessarily. If it's at a good level of support resistance and it reaches it, good chance it's going to bounce. So you can trade it all manually. All it means you've got to do is you, as I used to, you have to have this dashboard checked every hour or 4 hours for RSI extensions, or have the alerts pinged to your mobile or email or however you want to. That's it. So you're all manual. The only difference between manual trading and auto trading is the EA just watches this for me and waits for the reversal alerts. I can do this all manually very easily. You don't need to automate it. It's just, for me, I just can't be bothered. I'm lazy. And also, like with things like the Aussie dollar, yeah? So Wednesday morning, we've got the Aussie CPI and the New Zealand rates. I need the EA to trade this for me, yeah? So if there's a big, strong push down and we sit down here for an hour and then it suddenly starts to push up, I need it to trigger an order. I'm not going to be awake. I'm going to be asleep. So you won't miss any entries. Like that CAD one, like I said, the US dollar CAD. Yeah, I was in London. When this triggered, I was at the top of the tallest building in London called Horizon 22, overlooking London from above, looking down on everything. Yeah, the EA was trading for me. That's the beauty of EAs. But it's very rare I'm not in front of a chart. So it's only really, automation is great if you have no time. And it's obviously great if you're not up 24 hours a day, which is like most of us. The distance apart, half an ADR is my thought. Half an ADR is as tight as I would go. Anything less than half an ADR, you're going to struggle. So if you look at something like the CAD Swiss, for example, if you look at the distance in between my entries, so there's my first up there. Second entry there is 31 pips. ADR is 34. So from that entry there, which was number one, to that entry there is 31 pips, which is pretty much an ADR. ADR is 34. But that's where the first reversal alert was. That's what I mean. If you place your entries, pending orders, half an ADR apart, you would have orders there like that. So right now you would be in 7, 8, 9, about 10 orders long. Yeah. But the reversal alert, waiting for those reversal alerts, means that you didn't get in there because there wasn't a reversal alert. You would have got in there. Yeah. You would have had a reversal alert in there, but it's too close. So the next reversal alert was there. So you missed that one, you missed that one, you missed that one. So it scaled you in there, there, and there. This is why the EA, I think, is so much better to trade with, because when you're trading manually, you are looking for a reason to get in. You will find 1,000 reasons at every level of price to get in. The EA will say, am I 3/4 of an ADR apart? Yes or no? No, I'm not trading. Yes, I am trading, but only when the buyers are on my side. That's the big difference. It made a massive difference to my over trading when I started using the EA. I've always had a problem with over trading. And that's partly why I've introduced automation into my trading, was to stop bad habits. I don't overtrade now. The only time I overtrade now is when I do aggressive drawdown control. Other than that, I just let the EA get on with it, basically, because I know historically, if you space your positions half to one ADR apart, you'll be fine. If you space them all half an ADR apart without getting any reverse alerts, you will get over leveraged and you will get squeezed hard. Like this one here. You know, if you're in 10 positions on this CAD Swiss now, I'm in 6. If you're in 10 positions on this now and they were spaced closer together, you'd be sitting in something like 5 to 7% of drawdown, maybe, possibly more. The further apart you space your entries, the less drawdown you're going to take. The more difficult it is to get out of your positions, though. So when you're looking at spacing, ADR spacing between entries, the closer you space, the closer that average will be. As price pushes down against you, the closer you space those entries, the closer that ADR is for you to get out of your entry. So it's got that as an advantage. The downside is you've got more positions on, more lot size, therefore you will take more drawdown, which makes you more uncomfortable. And in a big squeeze that might last for a month or two, occasionally they happen, it could be an account blower. So you don't want to do that. DAX has just broken the lows. Sorry, my terminals. Why can't I take any trades on that account? Oh yeah. So we're at the lows on the DAX. So it does look like we're going to run down potentially. So we've got this level here, which might act as support, but it does potentially look like we're going to test yesterday's low now. So high, low, lower high. We're on our way to make a lower low. We're probably going to pull back on this on the way down there, but we'll see. Hopefully that makes sense. Anyway, about ADR. Try to keep one ADR average to break. Yeah, so basically the idea of position trading is if you can keep your average within an ADR, so look at something like the Aussie US. So got 3 positions on this. First, second, third has just gone in this morning. Yeah. So as price pushes away from you, if you can keep your average price within ADR, we know that 58% of the time price stays within ADR, which means that 42% of the time price moves beyond its ADR. So it means that if you can keep your average within ADR, you've got a 42% chance of hitting it every day, which is pretty good odds. So when you look at something that is pushing on a daily chart in one direction, that's an ADR hit to the upside. Those 2 days together are an ADR hit to the upside. That's an ADR hit to the upside. ADR on this is 60. Look. So from that low to that high is 85. That candle on its own is 102. Those two candles together are 99. Big, strong push down. From that low up to there is 124. So that's 2 ADR, that pullback. So on that leg down here, that pullback is 2 ADR. Yeah. So if you can keep your average within the ADR low or high, depending on which direction you're going, you only need an ADR pullback to get out as a break even. It's only on the really strong squeezes that might last a few weeks where you just get an accumulation drop, accumulation drop, accumulation drop. And these will typically be just where the news just happens to go against that currency or go with. So in worst case scenario, with like this one, we get positive Aussie news and we get negative US news this week. It's going to go like that. It's not really going to go like that. It's going to go like strong news, nothing. Strong news, a little bit of a pullback. Strong news, yeah? Those ones, what's going to happen is every time you scale in, you're going to get ever so slightly further away from ADR. So instead of being within ADR, you're going to need to get 125 ADR or 150 ADR. So the more entries you have, it's very difficult to keep it within ADR. But the more entries you have, it means the further price is pushed, the further price is stretched, that elastic band theory, the faster that snapback will be, i.e. the bigger the ADR move to the downside will be when the profit take comes, which will still give you an exit. Every push has to have a pull. The pull is the profit take. The banks have to take profit. So from there to there, more than an ADR, look. So you had a run up from there to the high of 204 pips, which is 3 ADR. And then from the high to the low, you had a drop of 91 pips, which is 1.5 ADR. 3 ADR up, 1.5 down. What's that on a fib? 50% retracement. Market structure. So it just, this is why keeping your average within ADR will mean, even if this pushes now for another 5 or 6 days, if it pushes for 5 or 6 days, it's going to have a good pullback, good couple of ADR. So as long as you're within 2 ADR, you're going to get an exit. Look at the CAD Swiss. I've been in the CAD Swiss for a month. Yeah, we had an exit there. I didn't take it. Yeah, we had an exit pretty much there, which I wasn't here for, unfortunately. Yeah, but from that low, whoops, all the way up to there, 65 pips, it's 2 ADR. I was 225% of ADR to get out. But that's how it works. That's how position trading works. So, which is why I say, if you scale in too tight, you're going to get into more drawdown, but your exits will usually always be within an ADR, which is really easy to get out of, as long as you don't get squeezed. But you will get squeezed. So keep your spacing minimum of an ADR, half an ADR, but ideally 3/4 of an ADR to an ADR apart. Then you'll easily get out on those profit take moves. DAX has just pulled down into that weekly low, monthly low rather, which is an old, I think it's 2 months ago. Yeah, it's a 2 month high. So we're retesting at the moment this low. We found some more buyers out of this propulsion gap. So danger area here. Obviously, we could just go into rotation now and just sit like this for the rest of the day. But if structure's short, we'll be coming down to test that level there. So would be a good place to get out of your longs potentially, if you want to, and then test that level. But I'm going to hold it until there and then see if we get some price action. I much prefer to get out at a decent extension that's beyond a 2R. Otherwise, you're just getting a bit risky. I assume oil, which you were having issues with, is an outlier. Yeah, oil, I don't normally trade. I've never position traded oil. I only started trading it in the last year. And I've stopped because it's too aggressive, too squeezy. Same as gold. I don't position trade gold, and I'm not position trading oil anymore. Stop loss is fine, but the moves are too aggressive. Look at that. I mean, look at that move there from that low to that high. It's basically 2 ADR in under 48 hours. That massive drop there from that high to that low is over 3 ADR in 24 hours, pretty much. It's too violent and too volatile. Commodities are known for trending. The same reason I don't position trade indices. You look at a normal stock index in a normal market, yeah. If you short any of that, you're dead. It's manufactured to go up. Commodities like oil and gold, when we have safe haven runs, times of crisis, pandemics, wars breaking out and stuff, they will go nuts. If you are the wrong side on that, when it goes nuts, you're dead. With an FX pair, it will always correct itself because you've got two commodities, if you like, two instruments trading against each other. And they will not stay with the same bias for long before they correct themselves. Yeah, with the euro odd, the reason it pushes and pulls so much is because sometimes that's pushing, sometimes that's pushing, sometimes that's pulling, sometimes that's pulling. When you get one pushing in one direction and one pulling in the other direction, you get a longer move. But then there's always a correction because the guys that are in this need to get out. The guys that are in that need to get out. You always get a retracement with commodities, and which is why it doesn't work particularly well in stocks, which is why I don't trade stocks, position trade stocks. With stocks, you get good earnings on Nvidia, it'll go forever. What's your spread on UK 100 with Darwin X? I'm on Darwin X 0 and the spread is ridiculous, 8.4 points. Don't trade with Darwin X 0 then. I don't know what I haven't got my Darwin X account here. That's not Darwin X. This is on a different account at the moment. This is on Shift Markets. Yeah, no, this isn't Darwin X. I don't know, honestly. Uh, 8.4 is too big, though. Far too big. Darwin X 0 is not a real trading account, is it? It's kind of an evaluation account. I was reading up on it. I've got it bookmarked. I was reading up on it on Thursday last week. It's really for long-term swing traders, stroke investors. It's like a prop firm for swing traders, this is. You are not going to get funded on this with any capital that's going to make you any kind of income that you would be able to draw on for a minimum of 6 to 12 months, if that. Yeah. Look at this one here. Yeah. 778% return since 2015. Yeah. So this is a Darwin that has a 8-year track record. They've got 32 million under management by 1500. Yeah. They are earning 765,000 euros a year after 8 years, which is bloody good. But you have got to have a track record returning no more than 5 to 10% a month for 8 years, for a long time, for 6 to 12 months. And it's a great thing, but there isn't a system or a strategy that's really going to work on this. You need multiple strategies running on one account to maintain a stable, income. The trouble with this is is the rules, the calibration stage. Yeah, you trade with virtual funds, where basically they will evaluate you. The problem with the evaluation is, if you treat this like a prop account, they won't fund you because it's too aggressive. All the Darwins that are actually doing well on here, if you look at them, none of them returning more than sort of 5 to 7% a month maximum. And none of them are trading in low time frames at all. It's all investment stuff. Look at you do a calculation here, look. Percentage returns this calendar month. Cumulative earn for the prior 5 months. Let's put me in, see what happens. Uh, 21. See, I did 21% that month. I would say probably 20 minus 8. 40. Let's go 40. Maximum drawdown. Please use the dot to mark the decimals. Your expected allocation this month, 70,000 euros. So based on that performance, yeah, they would give you 70,000, right? Rating of 91.8. I have a Darwin running, yeah. And in the Darwin that I have running, I have spikes where it's done well over 10% a month. Do you know what happens to my rating? It drops massively because it's too aggressive, too risky. That rating that they're giving you there is not what you will get. Yeah. And then you're not going to get 70,000 allocation. I've had a Darwin running, which has been returning on the S&P strategy. It was returning under 5% a month for many, 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 many months. And I didn't even get a cent of investment from Darwin or from anybody. This just seems to me like it's just like they're trying to be a more professional prop firm, if you like. I'm trying to find some of their Darwins. This is Darwin X0, isn't it? We need to go on. We need to go on Darwin AI. No, I can't show it anyway. But yeah, I mean, I just don't. I'd be interested to know how you get on with it if you're going to carry on trading it, because they came up with this after all the prop firms, and it seems to me, from what I know, from my experience with Darwin and having run Darwins which were successful, they were not interested at all because I was too high risk. Way too high risk. Generating 10% a month is far too high risk. They're looking for 2 to 3%, 4%, 5%, that sort of figure with tiny, tiny, tiny drawdown. Your return on drawdown ratio needs to be 1-to-1. Yeah. If you've got a 15% drawdown and you've returned 5%, they won't touch you with a barge pole. That's just what I've experienced with it anyway. But I mean, you know, it may be different. I haven't got the time to put into trying to run one, to be honest, but I'd be interested to know what your experience is with it, if you do it. DAX has broken to the downside, or trying to break to the downside still. So we just had a new low go in. So if we can break this propulsion gap, next stop is yesterday's low. So we're watching for a bounce down there, but not going anywhere today, are we? Right, that's all I've got for you this morning. Just going to be watching basically what's going on today. So just managing the positions. I've got nothing. I've not got a lot of exposure on at the moment. So I need to get some more trades on, but the market's not really going anywhere at the minute. So CAD Swiss propulsion support rectangles holding at the moment, which is good. So yeah, so there's no obviously ADRs. There's no RSIs. There's nothing to get into any new positions. So I'm just sitting here waiting for something to move the market at the minute. At the moment, we've got no news catalyst today. So just a case of sitting and waiting, but we'll see. New low looks like it's going in on the DAX, which is good. Right, so I'll be back this afternoon at 2:20. Anything else you need, let me know. I'll be in the Telegram group. And back tomorrow morning at 7:50, same time for the Frankfurt session. And we'll see how we go this afternoon. So I will be back later. Anything you need, come into Telegram. Otherwise, see you guys later. Have a good morning.